Rahul Palkar, Joint MD at Indo Amines, is joining us to talk more about the numbers this time. Well, your margins, if I am not mistaken, came under a bit of a pressure this time round. Can you tell us what was the reason for that at 6%?
Yeah. Good afternoon, everyone. It's basically the margins were a little bit under pressure in the beginning, and at the end of the year, we were a little better off in the last quarter, and we could come to a better numbers in general. The revenue rose by 18%. The EBITDA was at 16%. The PAT was 29% year YOY.
So Rahul, the momentum that you saw in Q4, is it likely to continue into FY24 as well? Could you guide us? What would be the margins then? And what about the revenue growth?
Yeah, we are trying to continue with the same path. We are trying to look at better numbers and trying to maintain this kind of growth pattern in the coming quarters as well. The scenario is there is a little bit of slowdown in some of the sectors. Some of them are probably kind of the FMCG or the consumer category segments. But we are likely to have the balance done, and we'll try to continue with our numbers in this situation.
Point taken, but the 13% margin profile, which is almost at an 8-year high, do you expect that to be sustainable in FY24?
Yeah, we have a very good product mix and a category mix of all segments. So few segments are a little bit not are kind of volatile, but we expect others to maintain. We hope the situation will improve properly in the H2, the second half of the year. At this stage, we are trying to maintain our numbers.
This dyes and pigment segment, how are you witnessing the demand trend? Because there are some other companies also in this space which saw softish quarter. Dyes and pigments, what's happening here?
Yeah, dyes and pigments in general, or in terms of some special areas, in general are a little bit softened, and the growth is being seen little difficult. However, if you look at the entire market or global market, if they are well placed, I believe they will be in a better position to keep making sales.
Rahul, what you're pointing to is the fact that export is likely to continue quite strongly in the coming year as well. And if you can talk to us about what the capacity utilization levels you're expecting in the coming year, any capex which you have lined up?
Yes, so we have right now not planned any major capex, but we are focusing on utilizing the existing capex on a quite a good number. Right now, I think we would be at only 60% of our current capex done in the past, and we would like to utilize this more to an 80% number. So I believe the export market is also a good potential, since all the costs of shipping are softening and they have come to a better numbers.
Okay, so things looking good as far as export is concerned as well. But what about the balance sheet, Rahul? The debt stands at around 230 crores. Is that the number which is likely to be? Are you expecting it to reduce going forward, or perhaps increase if you plan those capex?
Yes, so capex are right now are not at a very bigger way planned in anything in this year. We are just running on whatever old capex we are already done that, and we'll not add on any numbers to the capex area right now. We are looking forward for you mean to say the total debt is likely to remain the same, and it will not increase in this year, hopefully.
Debt is not likely to increase, maintaining the current capacity, not looking at a big capex plan, but at least margin is something you expect to be sustainable given the product mix is improving. Thank you, Rahul, for joining us and talking to us about the outlook. But with that, we're complete.